Today I'm going to test whether the Ichimoku Cloud trading strategy actually works. In my testing, I use the default version of the Ichimoku Cloud. The settings for the conversion line period is 9, baseline period is 26, lagging span periods is 26, lagging span 2 periods is 52. We buy when the conversion line crosses the baseline, with a price close above the baseline and above the cloud. To sell, we simply flip the rules. We exit when there is an opposite signal. I applied the strategy on 9 different currency pairs, between the period of 2015 to 2020. We can see the results are mostly negative, regardless of the time frame we trade the strategy on. I proceed on applying the strategy to some US stocks and found that the performance of the strategy has greatly improved, especially on lower time frames such as the 2 hours and 60 minutes charts. In conclusion, the Ichimoku Cloud is a losing strategy on most currency pairs but has the potential to be profitable when trading stocks, especially on lower time frames. Ichimoku Cloud is a trend-following strategy, so it performed best in a trending market. However, I'm not satisfied with its performance and therefore, I'll not trade the Ichimoku Cloud strategy with default settings. It requires further investigation on whether fine-tuning the parameters can produce a more reliable and satisfying results for me to use this strategy in real trading. If you enjoy this video, please give me a like and subscribe to my channel, so you won't miss my next video. Leave your comment below which strategy you would like us to test in the coming videos. Thanks for watching and see you soon.